Hey everybody, Jennifer McCulloch with Century 21 High Desert, and I am here with my good friend Stephanie Hay, who is a mortgage specialist with Idaho Central Credit Union, and we're just going to talk a little bit about mortgages today and hopefully give you some information that will answer any questions you might have, or just, I don't know, get you thinking about questions that you might have, and yeah, we'll go from there. Perfect. Steph, do you want to introduce yourself? Tell them a little bit about how long you've been in the business. And
Yep, I'm Stephanie Hay with Idaho Central. I have worked here at Idaho Central for over 20 years. Love it here. So
we're like the seasoned people in the industry now. It's crazy.
And I love doing home loans. It's a passion of mine, and I'm happy to be able to share my expertise.
Yay! Okay, so a couple things that I know come up a lot is maybe explain a misconception that people have around getting approval and having their credit pulled. So sometimes we recommend that you do check, different places and compare rates and things like that. But there's some misconceptions around that. It seems like people don't always want to have their credit pulled. Maybe we can talk about that.
That is a really good point. So when you're pulling credit for a home, that's the best type of credit pull because it's the best type of credit. So when you pull credit, if you're doing credit shopping, you just want to try to do it within the same concentrated 2-week period, and then it only counts as one inquiry, even though there might be multiple lenders pulling it.
Okay.
You'll see each lender pulling it in an inquiry form, but it'll only count.
So basically, your credit does get dinged when you apply for a mortgage, but if you apply with multiple properties within 2 weeks, it's not going to hit it multiple times. Like, you'll see it hit, but it won't actually reduce.
It won't reduce your score.
Okay, right. It won't reduce your score.
Yep.
So just to make that clear.
Perfect.
And obviously that's important, right? Because in order to get for you to be able to provide like a real true pre-approval, you're going to have to do.
Right, because there's sometimes random things come up, so it's just in everyone's best interest to get a full pre-qualification before you make an offer, just so you don't get your hopes up and then something happen. You don't like that.
Yeah, well, and right now the market is so competitive, you guys, that every little thing counts, and if that's not completely ready to rock and roll, I mean, you're not even going to have a chance more often than not with all the competing offers. So it's really important. Okay, so let's talk about when they are comparing these different, pre-approvals from different companies. What should they be looking for? Sometimes we'll see like, oh, this rate looks better than this rate, but really, I know there's a lot more to it.
Right. So when you're looking at an estimate from a mortgage broker to another lender, what you want to really look at is the fees that they're charging in addition to just your regular title and appraisal. So if you have origination and points, because sometimes they'll say, oh, you've got this great rate, and then when you get down into the fees, you're paying $8,000 to get that great rate. Well, over time, if you put that out over time, it usually doesn't pay itself off. Okay. So it's really important to just know where your break-even point is if you're going to pay extra to get a lower rate, so that you're not actually paying more money.
Okay. So basically the point is, don't just look at the rates, look at the actual fees you're being charged, because you may have a lower rate, but you're paying to get that lower rate.
Right.
Correct.
Okay. And sometimes those break-even points can take 8 and 9 years to break even. So sometimes if you're paying too much to get a lower rate, you're not saving money at all.
Yeah. And I assume like for everybody, it's not a one size fits all. So for some people that actually might make sense.
Absolutely.
And for others, depending on what your goals are with the house, how long you're going to be there, there's a lot of factors that come into play, right?
True.
So
that's absolutely true. So it's really just make sure you break even.
Yeah. Well, and I would say that tells me that everybody, we don't like talking about our money. No, I mean, it's just a very personal thing. But when it comes to buying a house, the more information that you can share, the better that we can serve you. Because if Stephanie knows what what's important to you as far as monthly payments, or maybe you're only going to be in this house for 3 years, I mean, the more information that you can provide, the more helpful that she can be or I can be to make sure that we accomplish those goals for you. And because there's obviously, you can work with different loan programs, right, just as easily, or pay points down or whatever. So,
right. Exactly.
Okay. So I guess let people know, like, what if they were going to come in to meet you tomorrow, like what do they need to be prepared with?
Each loan requires a little bit different, but you almost always need your pay stubs, almost always need your last year's W-2s.
And how many months of pay stubs do they need, or how many pay stubs?
1 month worth of pay stubs, so if you get paid twice a month too.
Okay.
So
Pay stubs, W-2s. What about bank statements?
yeah, yep. 2 months bank statements from the account where you're gonna have your down payment.
Okay. Awesome. And then you guys do an online process, correct? Where they can fill out an online application, and you don't necessarily have to have those documents right away.
Right.
But I would say just be prepared with it.
Right. Honestly, most people know how much money they make, so as long as you're putting in your information accurately, we can verify income after. But
we get
good
really
to have
choked
all-
up about these
Right.
things. And I'm just teasing. It's
really
we need
good.
some water. We need some water here. Okay, cool. So let's talk about like credit scores and how that impacts maybe different loan programs or even interest rates, guys. Your rate might be different based on your credit score.
Yeah, some of the conventional credit loan packages have an increased rate once you start going below 740.
Okay.
So if you're going conventional, the best rate is 740 or higher. After you're above 740, you get the same rate no matter what.
You're golden.
Yeah.
Okay.
Yep. FHA, most of your government programs are going to be a 620 or higher. That doesn't guarantee an approval. That just means that that's a minimum requirement. And then rural development is 640.
Okay. Now, do we ever see any options if somebody had lower than 600? Are there any really programs that would be available?
That if you were to go out and Google it, it's going to say it's available. But right now, the lenders have put a lot of overlays on top of that to where you truly can't find a investor that will take a score lower than 620.
Okay, so 620 is the minimum, and I know that there's opportunities sometimes, like if you had to pay off a vehicle or something, where you could maybe do like a rapid rescore or whatever to try to get that rate, or excuse me, not the rate, but your credit score changed quicker. So there's some opportunities like that as well.
Yeah,
that they give you. Yeah.
Yep. That's and it's actually fairly easy. You just have to get the receipt, and then it costs a little bit of money, but might save you thousands in the long run. So it's worth it.
Yeah. Well, and if you're in a hurry too, and you're worried about, sometimes it can take a while to get that credit score up. So there's a lot of options. So again, this is why you need a resource like Steph to come in and kind of hold your hand through the process, because there's so much to know about this, you guys, and sometimes we just don't even know the questions to ask. So,
right.
Again, just talking to somebody who can kind of guide you. So I guess like beyond that, what I guess share with us what you see happening with the market. I know interest rates are low. I mean, where do you see this going?
Yeah, the interest rates are great right now. I mean, it's a great time to buy. It's a great time to sell and repurchase if that's something that you're interested in. I do see the rates probably holding for the next. Well, the rates are going to fluctuate a little bit,
Sure.
Because as the economy gets stronger, the rates are going to go up. That's just how it happens.
Inflation.
I think the housing market's going to stay strong, and the economic forecast is that it'll stay strong probably through 2021, at least, and then probably hold maybe into 2022.
Yeah.
So it'll be interesting to see. I think the rates will start to go up. So if you are thinking about moving forward with some kind of a housing financing, I would do it now.
Yeah, now's the time.
Now's the time. Yep.
I mean, these are like record lows. I mean, right now we're looking at what, 2.5% again, based on credit and other variables, but 2.5% on a purchase. For a refi, I think they're a little bit higher. But,
yeah, actually, the rate went up to 2.875 today.
oh wow.
Yeah, for the 30 years. So it's definitely it didn't jump that far.
Okay.
But and then the refinance 30 is 3.25.
Okay. Well, and keep in mind, so if you do not put 20% down, then you'll have mortgage insurance, and that's going to vary a little bit as well in cost. But usually $80 to $120 a month?
Yeah. Yep. And the more you the more you put down, the less you pay in mortgage insurance. So if you put down 10%, you pay less than 5%, but it's usually right in that. If you're putting 5% down, it's usually in that 80 to 120.
Okay. So, but you can there's still great programs with 3.5% down, good credit, second mortgages still available. So you guys, there's a lot of options. The biggest thing is to just get in, see Steph, talk to her about what your options are. And then of course finding the house, which is a little challenging right now, but that's why it's so important to do it now, because you might be looking for a little while just because the inventory shortage is so huge right now. So
Yeah. And it's also, whenever you make an offer, it's better to have that pre-approval letter with your original offer saying that, you're good to go.
Yep. In fact, it's imperative. I mean, you can't even compete in this market without it. So
Agreed.
yeah.
Yep.
Awesome. Well, thank you so much for being here. And you guys, we will post Steph's information on this video, and feel free to reach out to her with any questions. She's a great resource, and I really appreciate you. Do you have anything else to add before we wrap up?
No, that's about it. I really appreciate the opportunity. And
really quickly, sorry. Do you know, does Idaho Central facilitate, I think they do, the first time home buyer savings program?
Yes.
Yes. Okay. So if you have not heard about this, you guys, go into an ICCU branch. If you start, they have a savings program now that's kind of like an IRA. So it's tax free. You can put money in there up to $15,000 annually, individually, but it has to go towards the purchase of a home. So it can be used for home inspections, closing costs, down payment. It doesn't matter as long as it's going towards the purchase of your home. And not every bank is facilitating this, but Idaho Central is one of the banks.
Yes.
So.
Yes, we are.
All right. Awesome. Thanks, everybody, and have a great day.